Welcome back. You're watching Buy Now Sell Now from ET Now SPL Live Studio, and we are talking to managements on their second quarter earnings. And now it's time to get connected to Vascon Engineers, and the Q2 performance looks steady. But then, what's up for the second half of this financial year, and what's about the real estate pipeline? We are joined by Siddharth Vasudevan Moorthy, Managing Director, Vascon Engineers. Hi, morning, and welcome to the show. Let's just talk about the revenue front, because the revenues has grown decently year on year, but then what about the sequential performance that looks slightly flat? How would you like to review it? Any specific reasons for the muted growth out there?
Yeah, hi, good morning. First of all, thank you for having me. We have grown not just in revenue, but also in the bottom line by 15% when you compare our quarter two last year to this year. So I think that is a significant, jump. And also it shows that our focus is not just on the top line, but on our profits as well. Uh, Typically, the first half of the year has always been a little slow compared to the second half, predominantly due to the monsoon weather in the country as well as the festivals. We typically do very well in the third quarter and fourth quarter, and you can see that in the trends that we have seen in the past. And I think those are self-explanatory for itself. So we're very excited for the coming 2 quarters of this year.
All right, great to know that. But what's the visibility in terms of the numbers for the second half, since you are positive on that? Any number that you can share with us, and based on the current execution rate of your order book?
Yes, so the total order book at this point of time is over 3,500 crores. And typically, on a thumb rule basis, we end up executing around one third of this every year. So as the order book increases, and our target for the next 2 quarters is to bring in orders to the tune of around 1,500 crores. So we'll see significant push in the revenues as well.
Siddharth, on the profit front, which definitely looks improved significantly, are these growth levels sustainable? What's the trajectory out there?
So one of the things that we have really focused on is the profit. And we have been very picky on the kind of work we choose and the clients that we're working with. So if you see our client base at the moment, we have clients such as Vedanta, Capgemini, and we've recently even signed an MOU with Adani. On the public sector side, also we're working with just a few public sector players like Airports Authority of India, and we're doing hospitals across the country. So these are very public sensitive projects where time is of the essence, and this is where we thrive as well. So we are very positive that our margins will be maintained.
All right, so definitely, and although here we've seen EBITDA margin has not seen very high growth, but what is the sustainable operating margin that you project for the EPC segment and the real estate segment going forward? Any specific targets or guidance out there?
Yes, so generally, what we're looking at EPC is in the range of around 10% is where we would ideally like to be. And we're working hard to ensure that we get to those numbers. In real estate, we would be doing around 25 to 30%, margins. So yes, those are numbers we'd be happy with.
That's great to know that. But with respect you did affirm to the long-term targets of 4,000 crores of EPC order book and 2,500 crores of real estate projects by FY27. Any fresh take here?
Yes, so we have been bidding, and like you all know, we have signed an MOU with Adani as well, which we have not got into our order backlog at this point of time. So as this fructifies and numbers start adding up, we would be touching those numbers. On the real estate front, we have 4 projects in the pipeline, which we haven't announced yet because they are in different stages of approvals, and we would like to announce them only when we have all our approvals in place. That also does not form part of our current order book. So As and when these are ripe for execution and ripe for bringing into market, that is the point we'll be taking them on into the order book.
Sure. Siddharth, you've also recently collaborated with Adani Group for improved executions. Can you tell us more about the scope of this new partnership?
So we've signed an early stage MOU with Adani, where we would be doing the entire design and then post that the execution of their projects, predominantly in Mumbai. And we've given a press release to that extent. Yes.
And lastly, what is the planned capex for the rest of the year, and what are the plans to fund that?
So in the EPC business, we do not require much of capex because we take advances from the client, and we already have a strong strong assets in terms of what we require for execution. So EPC does not really require so much. The only thing that we require are the non-fund based limits for our bank guarantees, and we've just bagged around 50 crores from IDFC and HDFC as well. So we've tied up those limits for EPC. As far as real estate is concerned, the main capex over here that is required is for the approvals and getting the projects off the ground. As we get into the stage where the project is closer to approvals, we'll take calls on either funding this with debt or equity.
Right, Siddharth, I think that will be all. Thank you so much for joining in today and speaking to ET Now, and good luck with all the plans ahead. Thank you so much.
Thank you so much.